Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, we saw returns ranging from CBAM 5v2 returning 1.18% down to CBAM 1v2 returning negative 0.54% in a week where 8 out of 10 of the CBAM portfolios would outperform their respective benchmarks. In terms of economic data from the past week, we did see quite a couple of interesting data points, ranging from manufacturing coming out of the US to retail sales and industrial production, alongside that deterioration that we saw for industrial production, fixed asset investment in China, alongside UK unemployment ticking up, alongside US jobless claims as well, and EU GDP moving sideways in line with expectations, and then finally Japanese GDP surprising on the upside alongside inflation. The story last week in terms of top performers in the portfolios, we did see a strong comeback from our Pictet Global Clean Energy position, up 3.75% in a week where we interestingly also saw a 2% recovery in the prices of Brent crude oil on the back of lower than expected US inventories, and also the International Energy Agency adjusting their outlook for demand upwards, despite obviously seeing some headwinds from China reopening quite slowly that we've seen from Brent crude, and that will be down about 10% on a year-to-date basis for Brent crude. We also saw some recovery there in terms of JP Morgan Japan performance. I did mention earlier a surprise on the upside for Japan GDP, and also that optimism we're seeing coming from the reopening trade, alongside that corporate reform trade that's been playing out in the Japanese equity markets as well. We also saw a rebound in US equity index performance, up 2.2%, despite some of the concerns obviously we've been seeing and continue to monitor on the debt ceiling and some sort of movement forward from the impasse currently in place. In terms of that US debt ceiling, you would see that overspilling to some of the global sort of fixed income markets, especially longer dated side of markets through government bonds, and that would see the US government bond position through Vanguard down about 1.42% as yields naturally begin to rise on the longer end as well as the shorter end of the yield curve on the fear of US government default, and also the cataclysmic effects that would have for global markets, and also speaking to those inflationary fears you're seeing from the UK market, and that would see gilts as well being affected by an expectation for continued interest rate hikes from the Bank of England, with gilts down 2.09%. Moving over to a quarter-to-date basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 1.22% for CBAM 5 down to negative 76 basis points for CBAM 1v2, and that would also see a good performance continue to be to evidence itself from our Hypnosis Songs Trust position, up 5.8% on the quarter-to-date basis. Still on market bets really, that would be a peak and pause in terms of interest rate hikes for the interest rate sensitive asset class, and that also, as I mentioned as well, reform in Japanese equities and attractive valuations, seeing JP Morgan up 5.47% on a quarter-to-date basis alongside Fidelity. But in terms of detractors from performance, we do continue those concerns I highlighted as well earlier for Bailey Gifford China down about 11%, Columbia Threadneedle China down about 9.94%, and finally HSBC also down 8.03%. Then just coming into the fresh week, we've seen some weakness for PMI data across most developed markets, and also, as I mentioned earlier, US debt ceiling concerns continue to abate in markets, and also we did see a surprise on the upside rather from market expectations on UK inflation, despite that finally coming down to single-digit range, and the IMF at the beginning of the week upgrading their outlook for the UK economy. And then tomorrow and Thursday, we look forward to a US GDP reading, and that would be something that we'll be looking forward to. And in the coming week, hopefully in about 7 days' time, we will be also pinging over our monthly performance numbers, so clients will definitely need to look out for that.